Hey everybody, Lenny LaRocca with the LaRocca Real Estate Group. Hey, listen, I wanted to drop a quick video. It's not going to be a very short one though. Talked about a great article that was in the Wall Street Journal just the other day. The title of the article was "The Pandemic Ignited a Housing Boom," but it's a different one from the last one. And what they're saying is that the last boom that we had, as you recall back before the 2006 crash, was a lot stimulated by the lack of regulation with the home mortgage industry, if you will. So what they're saying now is that even though this pandemic has really kicked off a lot of movement in the real estate market, it says the residential real estate market is on its biggest tear or productivity since 2006, just before the housing bubble burst and set off a global recession. All of us remember this time. Yet in nearly every meaningful way, today's market is in the inverse of the previous boom. So again, there was other economic factors that determined the boom last time. This time it's completely different. In 2020, sales of previously owned U.S. homes surged to their highest level in 14 years. And many economists forecast that the sales will rise again this year. That's this year in 2020, even though we continue with the lack of inventory. The current housing boom is far more stable than the last one, as we're talking about, and poses fewer systematic risks, economists say, because again, we're not dealing with the lack of regulation in the home mortgage industry. There are more barriers though to entry, and it's more difficult for buyers who aren't already homeowners to make their first purchase. So first-time home buyers, if you're out in the market today, make sure you're attached to a good real estate professional. We'd love to work with you here at LaRocca Real Estate. It's a very competitive market out there, but you got to get out there, you got to get aggressive, and you got to take advantage of these low interest rates. Most real estate analysts agree that the pandemic helped ignite the current boom as some urbanites look towards leaving the crowded city lifestyle and heading out to more of a suburban lifestyle. So there's a lot of movement out of the larger cities, New York, San Francisco, and cities like that. And I believe everybody's aware of that. June sales surged nearly 21% over the prior month in last year in 2020. The biggest monthly increase on record going back to 1968. Hello, did you hear what I said? 1968, 2020, 1968. That milestone lasted only a month though, when July sales rose almost 25% from June of last year. So not only did June jump from May, but July of 2020 was higher than even June, going back to 1968. COVID has catalyzed a rethinking of where we live, how we live with our family. Everybody's living in the house together. The housing market's biggest near-term concern is rising mortgage interest rates. I know I've mentioned this to you before in the last couple of weeks. Rates have gone from somewhere in the upper twos. Now we're about 3 3/8. Not bad. It's still very cheap, and everybody should be taking advantage of these low rates even today. Jerome Powell, the Federal Reserve Chairman, said this month that the central bank will maintain ultra low interest rates until its employment and inflation goals have been met, which he said are still a long way away. So what does that mean? 2021 is going to continue like 2020. Economists do caution about the shortage of homes. We've talked about that a lot. Everybody's talking about that. That's why the buyers, it's a very competitive world out there. You need to be working with a real estate professional that knows how to work the market for you. So definitely look at working with somebody. And again, we're always available here at LaRocca Real Estate. Market watchers also say that the number of longer-term trends are at play that should keep the housing market hot or at least steady even after the COVID-19 demand goes away. Millennials, the largest living adult generation, continues to age into their prime home buying years and plunk down savings for homes. At the same time, the market is critically undersupplied. New home construction hasn't kept up with the household demand. For years before 2020, we have been all waiting for the last couple of years for the millennial generation to step into the buyer pool, and they haven't. Maybe something happened with COVID. It's changed the mindset, and they're now with us now. Mortgage lenders, meanwhile, are maintaining tight standards. Buyers are drawn to the market by historically low interest rates, not so easy to access to credit. Rising home values also mean that even if homeowners can't afford their mortgage payments, they can likely sell their home for a profit rather than face foreclosure. And hopefully you understand that statement as compared to back in 2006. The biggest winners in today's booms are people who already own homes, who gained a collective 1.5 trillion in equity in 2020 from the earlier year, according to CoreLogic. They also have saved money for refinancing their home mortgages at record low rates. Many have started renovation projects and bought vacation homes. We have many clients that have been doing that over the last year or so. Those trying to break into the market for the first time have rarely found it more difficult. U.S. house prices soared 10.8% in the fourth quarter from the year earlier. The biggest annual increase in data going back to 1992. I can tell you, I've been doing this business just shy of 20 years. I've only been in one other down cycle, so both my previous cycles have been up. And I will tell you that trying to close on a buyer deal in today's competitive market versus back in 2006, it is more challenging today. Housing has become a luxury good. The economy seems to have officially split into two. There is so much hardship in one part of the economy, and there's just an absolute mad dash to buy houses in the other part. And I think we're all aware of that. In 2020, lenders had more demand than they could handle. Homeowners rushed to refinance at lower rates, and buyers flocked to the market. Mortgage originations rose to a record high in the fourth quarter of 2020, according to the Federal Reserve Bank of New York. Finally, unlike in the building boom of the mid-2000s, a deficit of homes for sale is playing a big role in the current spike in prices. New home construction hasn't kept up with the demand of recent years, and the builders took years to recover from the financial crisis that they faced in the prior recession. Those shortages and rising material costs continue to hinder builders as they increase production. This was a great article, and I'm just trying to summarize here. Some economists say that the decline in demand would be welcome as a way to show house prices, to slow house price growth. House prices are going up at astronomical levels. Even with borrowing rates near 3% for a 30-year fixed rate mortgage, much of the benefit to buyers is to offset by rising home prices, meaning that even though the money is cheaper, you're paying more for the house today. The Urban Institute projects that by 2040, each generation will have a home ownership rate lower than the preceding generation had at the same age. That means younger Americans could struggle to build household wealth compared with previous generations. And boy, don't we feel that today. So that was a great article. It really talked about what's going on in the market today. If we can help at LaRocca Real Estate, we are here to help. 310-698-6444. Look forward to speaking with you real soon.